Due to the rapid rise in mortgage rates over the past 2 months, how is that impacting current home buyers and also the US housing market? I'm going to talk about that in today's video, including an update from Redfin just posted on November 7th regarding what's happening right now regarding home sales, housing inventory, home prices, and much, much more. Thank you everyone for joining me today. I appreciate you. This was posted on November 7th. It says pending home sales held steady in the final run-up to the election despite 7% mortgage rates. So pending US home sales, a measure of contracts being signed between buyers and sellers, rose by 4.3% year over year. That's actually a small decline compared to last week. Last week it was up by about 4.5%. But in any case, a rise of 4.3% over the past 4 weeks is in line with the increases we saw over the past 6 weeks. The fact that pending home sales held up in the final run-up to Tuesday's election is somewhat surprising. Redfin economists say they would also expect high mortgage rates to deter buyers more than they have. Mortgage rates have jumped to over 7% over the last few weeks, according to the latest data from the Mortgage News Daily. However, I'm really glad they mentioned this because I was going to do that. It's worth noting here that one reason why pending home sales are up compared to 12 months ago is that we're comparing the same period last year when rates hit very close to 8%, driving down home sales, of course. So of course it makes sense that sales are up compared to 1 year ago, because 1 year ago rates were very close to 8%, and today's rates are more or less in the low 7% to upper 6% range when looking at data from the Mortgage News Daily. So speaking of that, let's look at the most recent report from Freddie Mac, just posted also on November 7th. According to them, based on their survey, they do a weekly survey, the average 30-year fixed rate is at 6.79%. This actually marks the sixth consecutive month in which rates have increased compared to the previous week. According to Sam Cater, who's Freddie Mac's chief economist, he stated the following: "It is clear purchase demand is very sensitive to mortgage rates in the current market environment. As soon as rates began to rise in early October, purchase applications fell and over the last month have decreased by 10%. So the amount of people who are submitting loan applications, in other words, to buy houses using a loan, that fell by 10% compared to 1 month ago. One thing that's worth mentioning is this right here. So 1 year ago at this time, the average 30-year fixed rate averaged 7.50%. Now, again, according to Freddie Mac, it's at 6.79%. So even though rates right now are the highest level since approximately July this year, we're still lower than the same time frame 1 year ago. Let's take a look at the Mortgage News Daily for Freddie Mac. Right now, again, at 6.79%, according to the weekly survey. 1 year ago, approximately 7.5%. But at 6.79%, this is approximately 70 basis points higher compared to the low point was back in end of September this year at around 6.08%. All right, let's share how this is impacting current home buyers right now. So let's take a look at an example. Someone buying a $500,000 house, putting 20% down. The interest rate, again, as of the end of September, was at 6.08%. I'm just looking at rates according to Freddie Mac, right? So according to that scenario, I'm excluding taxes and insurance. I'm only looking at the increase in rates, how that impacts buyers. So your housing payment based on your principal and interest would be $2,418.81. Now, taking the same scenario, $500,000 at 20% down, looking at the weekly rate as of today is at 6.79%. So therefore, your new housing payment would increase to $2,605.04. Therefore, due to the increase in rates, your average monthly housing payment just increased by $186 more per month. Now, here's how I look at this. This is really a triple whammy for home buyers right now, right? Number one, the increase in rates up by about 7 percentage points. Going from 6.08% to approximately 6.8%. Causes a decrease of purchasing power by 7%. So people looking to buy a house using a loan, your purchasing power just decreased by around 7% because rates increase by that amount. That's number one. Number two, as I mentioned, the rise in your housing payment. increasing by $186 more per month. And number three, the big increase in the amount of interest paid over the life of the 30-year term based on this example. So let me share that with you guys. So interest paid at 6.08%, the total amount of interest paid over the life of that 30-year loan would be $470,773. Now, when rates increase, now you're looking at paying over the life of that 30-year loan, $537,813, which equates to an increase of $67,000 more in interest paid over the life of that 30-year loan. A couple of things that's worth noting though, it's highly unlikely that someone will own their house for 30 years, let alone keep the same loan for 30 years as well. It's very common for people to move every 10 to 15 years. And of course, for people to do a refinance as well, because rates right now at let's just call it upper sixes, low sevens, it's highly likely that the homeowner will refi later and get a lower rate than they are today. But they do hold it for the long term, 30 years, you're going to pay approximately $67,000 more interest paid compared to when rates were much lower than they are today. All right, going back to Redfin's report, let's talk about some early signs of home buying demand. It says there are signs that house hunters at the earlier phases of the home buying process pressed the pause button as the presidential campaigns drew close and rates, of course, increased. Redfin's Home Buyer Demand Index, that's an index which measures the amount of real estate showings and, of course, other home buying services requests they get from their agents, is at the lowest level since mid-September. And mortgage purchase applications, according to the MBA, are down by 5% week over week. Redfin agents in places like Philadelphia, Phoenix, Atlanta, and Charlotte, North Carolina, are reporting that a fair amount of prospective buyers sat on the sidelines over the last few weeks. Every market's different, right? Every house is different too, by the way. I had a client who was interested in placing an offer on a property about 2 weeks ago. I think it was about a week ago, actually. The home seller received 6 offers on that house, even though rates are at relatively high levels right now. Other houses are sitting in the market longer because they're asking more than what their house is worth. All right, changing gears slightly here to talk about some key takeaways, and let's talk about home prices based on the U.S. median sold price. That's at $386,970, up by 5.8% year over year, the biggest increase since October of 2022, the biggest year-over-year increase in about 2 years. Asking prices rose by 5%, but also your median monthly mortgage payment decreased by 1.3%, but it's at its highest level since July this year, with the exception of the previous week. This number, by the way, $2,607, is based on the median asking price on a national level and also the weekly rate, according to Freddie Mac, for a 30-year fix last week at 6.72%. So this payment right there will be higher next week once they announce that mortgage rates went from 6.72% to 6.79%. Redfin also shares how each of the 50 biggest cities fared, of course, because there are some very big differences. And by the way, this report covers the 4 weeks ended November 3rd. So looking at this, there's only 2 metros that decrease on a year-over-year basis regarding the median sale price. That was Austin, Texas, down by 3.6%, and San Antonio, down by 0.6%. In contrast, the biggest increases were Fort Lauderdale, Florida, up by 14.8%, Milwaukee up by 13.9%, Warren, Michigan up by 9.6%, Nassau County, New York up by 9.1%, and San Jose, California, just south of San Francisco, up by 8.8%. Also, check this out. Here is a look at the U.S. Median sale price at $387, running up to about an increase of 6%. I mentioned this last week. This is highly unusual because over the past month or so, prices have been increasing, which is exactly opposite what should be happening because home prices tend to decrease during this time of year, right? So what we're seeing right here is the results of rates decreasing to what, 1.5 year lows back in mid-September, because you get an offer accepted, let's just say October 1st, you'll close escrow in early November. So these rates that we saw, a month ago are kind of skewing the numbers here because anything based on a closed home sale is a lag indicator what our housing market was like approximately 1 to 2 months ago when the home buyer got their offer accepted. And what happened 1 or 2 months ago, rates decreased to about 1.5-year lows, whereas right now we're basically at a 4-month high regarding rates. So, don't expect to see that prices are going to go like this for the remainder of the year due to seasonality, an increase in supply, but also due to an increase in rates. We should expect this to kind of level off, then to go down through December this year. All right, let's talk about pending home sales, new listings, and also active listings, or the amount of houses for sale. So pending sales, there was just under 73,000 contracts between buyers and sellers right now. That's up by 4.3%, a little bit lower than the 4.5% we saw last week. But that's one of the biggest increases in a year or so. So new supply in the market has completely lost momentum. So this is the amount of people listing their house for sale only increased by 0.3%. Whereas on the demand side, it rose by 4.3%. So demand rising faster than supply, which is causing active listings or house inventory to post the smallest year-over-year increase since March this year, up by 12.3%. Let's have a look at Redfin's data center regarding this. Pending sales up by 4.3%. The blue line below is 23. The black line is 2022. And up here, of course, is 2021. So again, just under 73,000 pending listings, more or less in line with 22 and 21, but way lower compared to the craziness of 2021. At this time then, there was just under 111,000 pending listings. Let's have a look at the supply side. New listings, a measure of people listing their house for sale, is in line with what happened last year and 2022, but still lagging behind 2021, when at that time there was 95,000 new listings. Now there's only 79,000. Because we're seeing a bigger increase of pending sales and a smaller increase of new supply in the market, active listings are going down, which is this right here. A small increase up by 12.3%. That's the smallest increase going all the way back until the 4 weeks ended March 17th this year. It is all about supply and demand, right? When supply goes down and demand or sales go up, of course, that causes upward pressure on home prices. But again, I'm not expecting to see that for the remainder of the year due to all those factors that I previously mentioned. In regards to pending sales, let's take a look at how each of the 50 most populous metros, because it actually increased in 35 of the 50 biggest cities. The biggest increase was actually in San Jose, up by nearly 25%. Then we have San Francisco up by 18.7, Dallas 17.8, Portland, Oregon up by 17.6, and Virginia Beach, Virginia up by 17.5%. In contrast, all these metros in Florida are down greatly, especially Tampa because of the hurricane that hit that region, down by 25.8%. Fort Lauderdale, Florida, 16.4. West Palm Beach, Florida is down by 16%. Same for Orlando. And Miami is down by 14.3%. And because only 15 metros decrease year over year, only 30% decrease in the nation. In regards to new supply in the market, that actually decreased in 17 metros. Again, the biggest decline is actually in Tampa, again, because of the hurricane. I mean, you're going to see a lack of people listing their house for sale and also a lack of people buying houses when you have a hurricane that just hit your region. In any case, after that was Austin, Texas, down by 17.3. Orlando, Florida, down by 17%. Atlanta is down by 16.4. West Palm Beach, Florida, down by 14.6. The biggest increase of the measure of new supply in the market is Seattle, up by 14.7. San Jose, 12.6. Washington, D.C. saw a gain of up by 12.5%. Baltimore, Maryland, up by 10.7%. And Anaheim, California, home of Disneyland, is down by 10.5%. In regards to the month supply on a national level, the month supply is at 4.0 months. This means that if there's no more new listings, at the current sales pace, all the houses for sale right now would be sold in 4 months at relatively low levels, but high compared to the lows we saw in 21 and 2022, early 2022. In any case, at 4 months flat right now, this is 0.4 months higher than 1 year ago. So 1 year ago, the month supply was at 3.6 months. Now it's at 4 months, which is at least a 3-year high during the same time frame. So for example, in 2021, the month supply was only around 2.3 months. Looking at this year, we're seeing a more seasonal increase, which starts really in mid-summer each and every year. Having said that, it's still higher compared to the past several years though. All right, a few more slides I want to share with you guys. Let's talk about how fast or slow houses are taking to sell. So the median days on the market is at 41 days. This means it's taking about 7 days longer to sell a house on average compared to the same time frame in 2023. Also at 41 days, this is at least a 3-year high during the same time frame. And lastly, let's have a look at the average sale price to final list price ratio at 98.7% right now. So out of all the houses that did sell, they sold for, on average, 1.3 percentage points less than the seller's final list price. Right on par with what we saw 2 years ago, but lower than 2023 and much lower than 2021. Back then, houses on average were selling for the seller's asking price. Now they're selling for 1.3 percentage points less than. And with that said, if you guys want a real estate agent referral anywhere across the United States, please check out my website, which is realestateteamfinder.com. Also, we included a link there if you guys want to apply for a loan. I am a licensed loan officer here in California, but my business partner, Jim Black, is licensed in the vast majority of all US states. We have an update for you guys regarding that next week. Anyways, thank you so much for watching today's video. I appreciate you so much. We'll see you next video. Have an amazing day.